In this episode, I show how the trading strategy using the RSI indicator can be dramatically improved by moving to a lower time frame, a time frame that's better matched to the price action patterns we see caused by the various trading sessions throughout the day. I'll be right back after this brief message.
Darwinex is a UK FCA-regulated broker and asset manager on a mission to disrupt the financial trading, investing and asset management industries. If you're a talented trader looking to attract investor capital to your strategies, Darwinex is the fastest way for you to do this. We enable traders to raise third-party investor capital and then charge success fees on high watermark profits. Additionally, Darwinex itself invests in its traders with our seed capital allocation program that allocates up to 90 million euros per year in successful trading strategies. So, if all of that sounds interesting, learn more by clicking on the link here, or you can find further links in the description right below. Now back to today's tutorial.
Those of you that have been following this series will remember that in the previous episode we had a major breakthrough in understanding, and that breakthrough led to me suggesting that the RSI trading strategy was likely to work much better when using the time of day filter if we reduced the trading time frame. And I said that at some point I would redo the analysis on that lower time frame, but when thinking about it, I decided it made most sense to redo that analysis straight away. And so here you have it. Now, for those of you that are new to the channel, this is all part of the Spotlight on Indicators series. And I started off this by looking at the Ichimoku indicator in a lot of detail. And then more recently, we've been comparing the RSI technical indicator with its newer sister, the stochastic RSI. And if any of that sounds interesting, you can find a link to the full series in the video description. So the first thing I'm going to do is to get the baseline again for just the RSI indicator without any filters at all. But this time, instead of using the 1 hour chart for the RSI indicator, I'm going to use the 5-minute chart. Okay, so that's off and we'll come back to this in a moment when that's completed. Okay, so that has just completed. And as we can see at the moment, this is a loss-making strategy, but that's no surprise because we haven't implemented any filters yet. And this is just the raw RSI signals. And the first thing that I'm interested in doing is comparing this to what we achieved with RSI on the H1 time frame previously. So the yellow equity curve that you see here is what we achieved in the backtest a moment ago. And this is the equity curve using RSI on the H1 time frame. And both of these were using the same parameters of 14 periods and overbought, oversold levels of 70 and 30. So other than the time frame, these are using identical parameters. But the first thing to notice is that the performance is slightly better than when using the H1 time frame, which is an encouraging starting point. But there's a much bigger difference here, and that is in the sample size or the number of trades generated by the strategy on each of these time frames. And if you remember, using the H1 time frame, we obtained just over 8,000 trades. And I expressed my concerns at the time that this was fairly low for a strategy that's trading 28 currency pairs, and that statistical significance would begin to become an issue. However, when we move down to the M5 time frame, this now increases the sample size to over 71,500 trades. And so this gives me a lot more confidence that any results we see now with the implementation of time of day filters is going to be much more meaningful and give us more statistically significant insights. So the first thing I'm going to do now in terms of implementing a time of day filter is to perform some analysis on how well different trades perform based on the time that they were opened. So to do that, I'm going to use my file that contains all of the trades executed as part of the backtest, and I'm going to use a pivot table and take a look at the open hour of day and look at the normalized net profit. So if we just create our pivot chart, this will be a lot more meaningful when we group these together into 1 hour segments. And it's interesting now that because we have a much larger sample size, we're starting to see better patterns in the data. So the Asian session, which we see on the left here, tends to be fairly mixed. But then as the European session opens, things change. And we get, as you can see, consistently losing trades if they're opened from the start of the European session all the way up to here, which is approximately the opening of the US session. And this bar that you see here is about a couple of hours after the US session opens. And then apart from this 1 hour here, all the way up to the end of the trading day, we see profit. So there's a very big difference between this early European session and then the US and the out of hours session. So my hypothesis here is that when trades are opened a couple of hours into the US session, when of course they are registering as either overbought or oversold, these positions will then go into profit as the Asian session opens the following day, where we often see price reversals when that session changes. But at the moment, this is just a hypothesis, and we'd need to perform the equity flow analysis to know if that is true or not. And so in order to perform that equity flow analysis, we now need to rerun the backtest, but this time only allowing trades to open between 1500 and the end of the trading day. So let's return to MT5, and I'm now going to use a time of day filter between 15 and just before the end of the trading day. I don't want to go any later than this because this is when the spread will be increasing. So let's now rerun that analysis. And again, we'll come back to that in a moment. Okay, so that's just finished. So let's return to our comparison charts. And now that we've looked at the baseline for the RSI on H1, I think we can now get rid of this. So the yellow curve, as a reminder, is RSI on the M5 time frame. And then we need to adjust the axes a little bit here when we show the next equity curve, which is the one we've just produced using that time of day filter. And the improvement here is significant. So this is just opening trades now in that period, a couple of hours after the US session opens, all the way to the end of the out of hours trading session. And by doing that, let's look at what happens to the number of trades. And in this case, it almost halves. So we're now left with 37,000 trades, which is still a good number to give us some assurances that the statistical significance is valid. And now that we have the equity data, we can perform the equity flow analysis. So this is effectively a replica of the equity chart that we saw a moment ago. If we just adjust the axes here, this matches what we saw in MT5. So now to analyze this, again, I'm going to use a pivot table and look at how equity changes across an average of the hours in the day. Now, you'll remember that this first bar and last bar are anomalies because of the extended spread overnight, and so it's best to remove those so that we can see the rest of the information clearly. So what does this tell us? It informs us about how equity changes hour by hour, but when we consider this in relation to the time of day open filter, where we're only opening trades from 1500 here, we can see that on average, the equity is probably net positive until the end of the day, but only just because we have these losing hours. But then as soon as we go to the following day and the Asian session opens, we have a lot more consistency. And so this backs up my hypothesis that a price action reversal caused by the change in session then takes our trades into profit. And you can see that that remains the case until the European session opens here. So whereas on the H1 RSI, we didn't get any discernible patterns that told us any information of any real use, now that we've dropped down to the M5 timeframe, the trade durations are better suited to those changing sessions. And that's one reason we're seeing better intelligence out of this analysis. And the other, of course, is because we have a much larger sample size. And so because of that, the results are more meaningful also. And so I think this strategy will now benefit from a close filter closing just before the European session opens, which is 10 o'clock server time on the Darwinex platform. So coming back to MT5, I'm now going to put in place a timed exit, and every day I'll be closing any trades that are still open by 10 a.m. server time, and rerun that analysis, and we'll return to this in a moment. Okay, that's finished, so let's now compare it to what we had previously. And it looks like this. So there is a slight improvement, and the equity finishes off a little bit higher than it did before. But as well as that, just a visual check of this tells me that some of the drawdowns are slightly smaller also. So this will give us slightly more opportunity to increase the position sizing, which we'll be looking at in the next episode. Let's take a look at the number of trades, and this has now gone up. Why is that, you might ask? Well, previously, when we weren't closing the trades at 10 a.m. server time, some of those trades would have remained open right into that US session later in the day. And because I only allow one position in each asset to be open at any one time, even if there were additional signals in that US session to open up a new position, they wouldn't have been acted on because the old position from the previous day was still open. But now that we're closing all positions at 10 a.m. server time, that means if we get additional signals in that next US session, they will now be opened. And that's the reason we have more trades opening. So as well as slightly better results, we've also got a better sample size now to base any further analysis on. So that's a win-win. But of course, we now have to return to the main focus of our analysis, which was to compare the RSI indicator with the stochastic RSI. So let's now look at the equity charts for both of these at the same stage, i.e. where we'd implemented a time of day open filter and also that time of day close filter based on the equity flow analysis. And they're now much more comparable than they were before. So the orange curve here is RSI on the 5-minute time frame, and the blue curve is the stochastic RSI on the H1 time frame. Most importantly, the stochastic RSI looks to be much more effective still. So although the standard RSI has caught up a bit here, when using this type of overbought, oversold strategy, stochastic RSI looks to be king. So let's look at a few key learning and takeaway points here. Now, the first one is the realization that I had last time, which is when attempting to compare two indicators, it's better to have the sample sizes consistent as opposed to the time frames. And when doing that, as you've seen, we were able to perform a much better comparison. Next, when using the default parameters on any indicator, which is what we've done all the way through this analysis, ensure that the time frame you use to run that analysis on produces a large enough sample size. And of course there, what we're looking for is acceptable statistical significance. And then finally, if you do want to investigate yourself the benefits of time of day filters that take advantage of price action patterns caused by changing from one session to another, then you must ensure that the position duration is suitably matched to that. When we ran RSI on the H1 timeframe, it wasn't, but then when we lowered that to the M5 timeframe, it seemed to be much better suited. So where next? Well, in the next episode, I'm going to be looking at enhancing the position sizing strategy. And now that we've got much better results for RSI, I'll be doing this for both RSI and stochastic RSI. And then looking at some next steps that you might want to undertake yourself in order to improve both of these strategies, which are certainly required before considering actually trading these in a live account. And then in the final 3 episodes, I'll be undertaking some coding tutorials for functionality that I've used in this series. And although I'll be using MQL5, the logic that I'm using is something that can be transferred to any programming language.
If you think you have any relevant information, hints or tips about the topic of any of my videos, then please remember to comment so that I and other viewers can all benefit from your insights. Also, if you're getting value from this video, then please remember to give me a thumbs up. Now, until next time, trade safe.